Okay, hello again, everybody. Trying this second time. I don't know what happened. But yeah, okay, it seems to be working now. Yeah, the stream has an issue, so I'm gonna share the link second time. Give me a minute. Let me maybe put some music while I'm doing that. And yeah. Sharing on YouTube, on Twitter as well. That's naughty doll. And sharing it on the other Discord. Okay, so is it still working? And do I have people coming back? Hello, MM. And this seems to be still working. Okay. Really, I don't know what happened. YouTube said the connection was excellent. OBS as well. But the stream was not working. So let's do that again. Not sure when did that get, so I'm gonna just do a quick recap. I'm looking at stock, SPX, because of the correlation, obviously, and we are at a very crucial place right now in stock. We do have, as a reminder, big macro 5 waves potentially finished on the top from last year. And yeah, this is a very relevant count. It has been, so obviously it's not only my idea, of course, it is an idea also from Robert Preacher, who write one of the most famous book on Elliott Wave. And if that count is right, that means we finished 5 wave cycles and we are going to a very, very long correction slash bear market slash recession slash depression. The question was remaining, is this 5th wave finished? Because here we have a very good candidate for wave 4, here as well. That's very the structure we're looking for. We have the diminishing volume between the 3rd and the 5th. We have an exploding rise on the last 5th wave here. Here we are on log, but you know, it's really accelerating like a blow off top. So even if this 5th wave is not finished, we most likely have a complete pattern here, which means we will at least correct this. So it still give us a probability of a very long bear market, right? And probably deep. We'll look at, I mean, at least below $2,000. If we were to really have completed the macro 5 waves, that would, yeah, most likely mean, I don't know, like the end of the US domination on the world, or the end of the world at all. Whatever. The question was remaining, did we finish here a fifth wave? There was possibility that this was still corrective and we were going still to go to a new all-time high. And now if we breach the low we have currently, then we increase a lot the probability that we have finished the wave here. So that's why it's very important where we are. And yeah, so if we locally from June low, we had the possibility to have either 5 waves up or an ABC move. As soon as we reach this, we validate the ABC correction and invalidate the impulse. If this is an impulse, that means we could be looking at another wave inside the correction for either a lower low or a final fifth wave, you know, considering the correlation there is with Bitcoin right now. Obviously, we are looking at this because if we break down, it could accelerate down. Now, it doesn't mean it will totally collapse here as soon as it breaks the low, because, you know, we could be in a 1 and still find a bounce for a 2 here before continuing. Subwave 1. But overall, yeah, that will not be good for the midterm. And if we are looking at the target, we will be looking for no wave 3 here. We'll look at the 161.8 at least minimum target, which sends us pretty low, and it can be much lower, right? So quick recap on that. That's done, and that's pretty much the same thing on every American stock, right? And in fact, we have already broke down a few days ago on the Dow Jones Industrial Average, transportation average, which usually is a leading indicator, and it reaches June low already a few days ago, so that's not great to see. The industrial average as well broke today. Nasdaq is still holding with SPX, so yeah, we'll see what happens, but that doesn't look great, right? And surely it can pull Bitcoin down pretty heavily. Yeah, people are back, good. So yeah, and yeah, right now, I mean, legitimately, this is where we bounce if we have to bounce here on SPX. If we just focus on this, we orbit the GI, the GT. If this has to be corrective, it has to bounce here. I mean, we're pretty close to invalidation anyway, but yeah, we filled the last gap. We are bouncing on the daily level. We had the 1-1 extension, so at the break path. DXY also in full blown full rally, so we had the possibility of having 5 waves finished here. Not so sure about this. If it was, it will have a low for, you know, a few months, years of relief for the others. Now it seems, yeah, it seems that it could go much higher. Now we could find a temporary top here. We are at the monthly level from the top, the last monthly level, significant. We are the 561.8 extension of this this wave 1 and 2 proposed here. So this is supposedly the max extension we should be seeing for wave 3. So we can still hope for some relief here. Oh yeah, the stream breakdown, like move here. Now on DXY, the thing is, if stocks are on the edge of a collapse. That means it could go much higher, right? Now I'm not a specialist of all of that. I'm just wondering if at some point DXY might be in some kind of blow-off top here, still retrace, and maybe it can go in a retracement while stock continue to drop. That would be the worst thing that can happen. I think it's possible. That would just mean that the dollar is losing value and all American stock are losing value against others. But yeah, it's not impossible. It's counterintuitive because DXY has always been inversely correlated to stocks, and I'm not sure it has to remain that way. And you know, the same way as there's correlation with Bitcoin, the correlation happen on when does this asset move down or up, but not necessarily the strength of these moves. But it can remain inversely correlated in the short term, but at the same time, while or maybe here DXY go into a corrective move down, the stock market could go into a corrective move up, and for each time DXY move up, stock significantly move down, and when DXY move down, stock just slightly go up, you know. And so overall the trend can be not so much inversely correlated. It's very likely it will remain on the shorter term, the time they moved, but not necessarily the strength. Hello, Nick. Bonsoir. So yeah, that's done. The goal of this stream is not to talk about stock all along, right? I want to talk about Bitcoin. That was the goal. So as I was saying on the first stream that failed, I made a thread today just to recap a bit the high time frame possibilities that we have on Bitcoin right now, or at least the one I'm seeing relevant. I'm seeing mainly 4 scenarios, so I'm gonna talk again about these ones, and we'll go into the lower time frame also to see what correlation could be possible. So yeah, someone asked me, who was it already? Mr. Fish, or I don't remember. Mr. Fish, that's it, was asking me about this scenario. That the one I'm keeping for now until invalidation. So invalidation for this scenario is to go below 13,800 here, because wave 4 cannot overlap wave 1. So until that happens, I want to keep that as a potential scenario. The question he was asking me is that there is not so much, we can say, alternation between wave 2 and 4 in this scenario. And usually in Elliott Wave, there is a sort of rule, guideline that say if wave 2 is deep, wave 4 is likely to be shallow. And inversely, if wave 2 is shallow, wave 4 is most likely going to be deep. And so if wave 2 is a simple correction, so a zigzag, ABC zigzag, wave 4 will likely be a more complex, so a WXY or a flat or a triangle, which we call complex correction. So now it's not a rule, it's a guideline. It's not mandatory. And we can see there is still a bit of alternation in some sense. If we take the retracement in log mode, you can see we retrace to the 1 146 fib level here for the wave 2 and the 382 for the wave 4. So we have what appear to be a deeper retrace, at least on the log scale. On linear, it's practically the same, 85% and 83%. But most important that than the alternation for me is that these two corrections last more or less the same time and are comparatively as deep. It can be compared, and so they're a good candidate to be a correction of the same degree, right? And you see here wave 4 to 90% of the time of wave 2. So I'm still liking that scenario. Now, one idea that I had for that scenario was looking at RSI. I think it was in monthly here. The idea that we have simply overbought monthly RSI for the first wave, go deep into the just below the 50% for the wave 2, overbought a second time and a third time. So supposedly I suggested here that was each of this was an impulse by itself. Now you can see how this already retraced to the level of a higher degree correction, and so we may have a candidate that say we already have a fifth wave finished. That was part of my through process using this when I first made that count when we were in that area, right? I was kind of looking for some kind of bigger divergence here, but I mean, we have a divergence between these two highs here. I was just expecting more blow off top. Now we can see how move change as well here for the fifth wave, how the asset is kind of maturing because it has the interest of more of the traditional finance and, you know, government, etc. It's not just a cyberpunk asset. And so we can see also how it changed here. We have a longer wave 2 retracement here. That's also why I'm still keeping this as a potential ID. We still have a nice structure here for this to be a 1, 2, 3. Clearly, well, we cannot go much lower, much longer. But I would say it's still valid. As long as we don't reach invalidation, it is still valid. In terms of time, the same, if we take the length of wave 3, wave 3 could be here, you know. Well, we are still between 1 and 161 at the time, so for me it's good enough. If we make it here, give us even more time. If we say that wave 3 finished here. Because, you know, wave 3 could finish on one of these high, because this could be part of a larger correction. Now, it's starting to be a bit deep for this to stay as relevant, but I mean, it remains. Now, also the idea here is that we are at a very crucial level of support on many indicators. We have obviously this 200 weekly moving averages. So we take either the simple, the exponent, or the exponential. We are well below that. But the simple or the smooth moving average, that's where we are right now. And clearly losing these levels is not good. So as said, since we lose the simple moving average, I say, okay, as long as we consolidate below, I will not flip full bearish yet, because it could be just a trap as long as we reclaim it after. A bit like we did here, but on a longer time frame. if there is accumulation below that level and we reclaim it, it becomes extremely strong, in my opinion. But yeah, if we start to go lower, it's not good, especially if we start to lose 13k, because that sends us to the next support at 9k and potentially just into that previous range, right? And that's not good. Also, we have here the logarithmic curve. We have support. If we look at the on-chain data, I talked about it a few times in the past stream, so I'm not gonna extend into this, but you can look at lookintobitcoin.com. There is many indicators. So we have simple cycle ones, but we also have on-chain data that I used to make indicators, and on almost all of them we are at support, at the global support. So if we start to lose our current level, that will appear to be fading. Elliott Wave, that was a good one as well. We were seeing that the people were starting to increase position. You can see the yellow in the middle that increase. It's the 1-2 year holding. That means that people are accumulating Bitcoin and not sending them. So for now, it's this yellow zone is still increasing, and when it's at level, usually it was at a significant low. Yeah, we can look at we can go on many of them. We have the same pool multiple as well that look at minor capitulation, which made there is an indicator for that. I think that's the one. Or am I? No, it's not the one. Which one is it? Oh, I'm making a mistake here. Ash ribbon, that's the one I was thinking about. Gosh. Ash ribbons. What am I doing? There we go. So we trigger potential bottom signal a few weeks back already. On a daily, we even triggered by this indicator. I've been pretty good at saying that we are already in a bull, that we already reversed, or we are at the bottom. So again, if all these indicators that are saying we are at the potential bottom, whatever the one you prefer, but all of the high time frame that you can use say we are at the bottom. So if we failed, you can understand how that's not going to be good. Nonetheless, we'll keep in mind alternative scenarios. For example, this, let's say, that's pretty much just an alternative of the same bigger count, just saying that this fifth wave is finishing another way with an ending diagonal. As I say, this kind of makes sense because it allows to invalidate the bullish scenario, go back into potentially into the old range. You can see the 1-1 extension here. So we don't necessarily have to go much lower than 12k. We could. And validation for wave 2 remains the low of wave 1, so really deep lower. Now that makes sense because it allows us to take the high and go back into a bear a bit, keep using that range, the liquidity we built here, and go into a fifth. So change really the way that the price action is evolving into Bitcoin, as well in trying to make it not sure it's less volatile is the right term, but kind of have less of an explosion like we had in the last bull run, and more of a contraction overall, right? So that some runs that become smaller and smaller and smaller. And ending diagonal is a good count when it comes to a fifth wave, right? Especially for Bitcoin. Has appeared to be kind of a rare structure in other, but it's a structure we saw a lot in Bitcoin, so why not having it on the very high time frame as well? And I know how this could become tricky, especially after all of this. You can understand how, if we take the all-time high we have currently, how people will turn extremely bullish again, and how coming back here they will turn extremely bearish again, and so yeah, it's kind of like this count still as an option. So remain to see where we'll find a bottom, what shape it will take. This is really forcing something that doesn't, that may have just finished its first wave. So trying to plan ending diagonal like this is really trying to see ahead of what is visible already. Yeah, the one possibility that remain bullish, maybe a bit less, but at the same time it could still give us a nice target. It's not necessarily a lot less bullish, because instead of having just a fifth wave to come, we are still into 2 impulse to come. So it can still reach about 200k, which is overall the target for the fifth wave here if we use the same fib level. Bull SC2, scenario 2. What is that? Oh, I didn't share it for a reason. Yeah. I'll talk about this for now. Before talking about the bear, we have the mid bear. So that one is saying that while we could indeed still go into a deeper correction, come back into the previous range here, but we might be just into a wave 4 of this debris. Bit of a problem with that is we have a very short wave 2 compared with the length of wave 3, but this is a wave 3 with an extension, so it's still okay, I would say. And the meaning behind it is fine as well, because wave 3 is usually when you have all your most of your participants that come into the market, into the asset. And in fact, we have 3 waves of different kind of participants coming into that market here. So should this be all of them be part of the macro third wave? That's not stupid in my opinion. Now, how long this will take to correct? Well, probably still a lot of time, because we will be correcting this wave 3. We could be comparing to the wave 2, but I'm more willing to compare it to the third wave. So 20% of the time of the third wave come here in March next year, and could extend a lot more, right? It's almost all the time. Oh, the Bitcoin is no. So here, just a suggestion how this could level, but anyway, just that we might be finishing a fifth wave, still finding a nice potential temporary bottom here, maybe come as up as testing the 30k before going again for the last leg. That would be like a standard ABC move. Doesn't have to evolve like this. We know correction sometime happen kind of differently in the 5 time frame. This idea is not bad in my opinion as well. Well, it's not bad. Yeah, that's why I'm sharing it. So it allows to retest the supply here, have a longer correction, and still go into a fib then. That would probably allow big participants that are entering the market, you know, all the financial industry, all the oil, oligarch, all the everything you want, Russian, American, and everybody allow them to pact some Bitcoin for some time here. So that would be bearish mid-term, more or less, because that still allows us potentially to have a rise, but there's no way to really know how this. There's no way. Hard to know really how this is gonna evolve. But yeah, as we will zoom in a minute, potentially we're finishing 5 waves, so we could have a nice one. I think it might break a lot of indicator and all trend lines. Moving average is saying organic, but yeah. Wait, if we go lower, that's what we're gonna do. Alexander Oliveira just followed you. Let's hope for better days. Thanks, Alex, and nice to see you again. And so, last but not least, the bearish scenario. Well, simply what this is saying is that we finished a cycle of 5 waves, and if that's the case, there is 2 options based on that. If we finish 5 waves, either Bitcoin made its all-time high forever and is on the path of just failing and going nowhere, right? Going to zero. Or we made just a first wave and we could be we could be correcting for macro second wave before going up. Now, in this ID, there are several problems. At least for the idea that we could be just correcting for wave 2. Well, first of all, that would mean still a very long bear market, because it brings us to July at least for a correction, knowing that it will be a wave 2, which will be expecting more like 50% or 61.8% of the time of the first impulse. 236 is fine for wave 4, but here I will expect longer. So minimum will be July, but potentially a lot longer. And a retracement here on a log scale, minimum retracement should be the 236, which is sitting at 1,600. And as I explained into the tweet, my problem with that is at 3K, Bitcoin market cap is 60 billion. So 1.6 Bitcoin market cap is 30 billion. So if the narrative we have right now for bullish Bitcoin is that the rich, the powerful are entering the cryptocurrency market and want Bitcoin, right? So it's either, BlackRock, Fidelity, the pension funds. I think the last week we heard about Russia legalizing miners, or don't remember which oil oligarch country talked about using Bitcoin for international transfer and etc. If all this big money is entering Bitcoin, there is for me no way that we go at such low level. It makes no sense. I mean, at that point, Bitcoin will worth a lot less than just 1 billionaire. So yeah, for me, that will be the camp that say Bitcoin is gonna fail. It's gonna be banned in some way. We could see a ban of mining in US and Europe, especially as some enemy are currently considering Bitcoin. They could be seeing it as a threat and decide to ban mining first, because it's for ecological reason, for energy resources. But then that could mean the end of it. possible. And you see how that could evolve. If we start to get acceptance back into that range, we have the potential of a top here. So yeah, here we go. We checked the first main scenario I'm seeing. Now, let's talk about the lower time frame. Two time frame to look for still. No, that one first. That one on another chart. Daily, 12 hour, whatever. What we do have. So we know we may have, for the bullish case, we have either the end of a wave 3 here, or the end of a wave 1. Or the macro flow. How could we read this? Well, we have the potential of some kind of flat here, either WXY or ABC. I will say these scenarios remain more likely as long as we don't breach June low. Otherwise, it become a bit too much extended, but fine. Alternatively, if we focus on this high before that scenario, we'll talk about, come on, that one or that one. Focus on the last significant swing high. So we may have a 1, 2, and just going for a wave 3 here. I'll still bounce and go for a 5th. So that would mean from the high from March, we are just into wave 3 here. Alternatively, yeah, an ABC. So that will be the bullish path for us to go for a lower low, break June low, but that will be the low, right? It will mean ABC, and it's very valid. So we could bridge slightly where we are, a bit significantly, and still be in a very bullish condition, as long as we don't just collapse. 13K will be 13,900 here, and Bybit will be very important for the most bullish case. Knowing that the validation for a 5th year doesn't have to reach necessarily the target that is at 15,500 here. It just have to make a slightly lower low to be valid. And we'll see after what we can count on this last part. You're welcome, Ronik, appreciate. Next. So this is in between, being bull and bear. How this could evolve. I think give us nice opportunity to still be looking for potential reversal here, either for an ABC, which would mean we're going into a new run, either just for a wave 4, stay again a bit into that range before continuing our breakdown. Alternatively, the bear one, bear bull as well. It's just a slightly different count than the initial ABC that I showed here, where I'm counting 1, 2, 3, 4, 5. Here we have cleaner 5 waves structure. We're just taking these 2 waves are very comparable, these two retracement if this is not an impulse. They are very comparable, so yeah, like they are a good candidate to be the same degree. And so the same, we could be just finishing a 5th wave here. We have again a target here about 16K, but validation is just to bridge the low here. That could in theory still be an ABC move. At the same time, it could also mean that we just finishing wave A, and we're going to retrace, but going back then. Now target here for wave 5 can be wide. Again, minimum target is just below wave 3. Standard target should be at least 16k down to very low. And yet I'm on FIB here. Very low, 7,500. So yeah, depending how this evolves, we'll zoom in a minute. That makes a lot, I know. Trying to take step by step, seeing what is possible on every time frame and zoom in and act accordingly, because we know there is confluence even between bear and bull scenario for reversal. Should it be temporary or an ultimate bottom? Now we know also, considering where we are, that if we start to break down significantly, we will just increase the chances of just a bear scenario to be valid, but then we could still be looking for a reversal at some point, or at least take profit on the short, you know. Diagonal, so we talk about it, and alternatively I bought WXYXZ count at the complex count. I do not like it for simple reason that most of the time this kind of counts are invalid. Most of the time there is other way to count it, and when you try, or when you can only fit a WXYXZ count into a trending move, so into a correction, not into a consolidation, but when it's trending, usually it's a force fit and it becomes invalid. On the lower time frame I've been seeing them, because this usually is a count you go if you want a correction, a corrective move. If you are bullish, you want a corrective move, but you cannot fit any corrective structure. Well, you have something that is 5 wave-ish, so you end up going with WXY. Nonetheless, it is valid in that term. So we subdivide WXY with ABC moves. And for this, we will have a target here at the invalidation of the bullish wave 4. I leave it because it's still proper in the sense it is right here, but I don't like this kind of counts. So here we go. We covered 4 scenarios, I think. Mainly the idea is that we either have a low here, as long as we don't breach it, we may have a low, and we may have finished a wave 1 here and finishing a wave 2 here and still go in a bigger run, right? There is no hope to be lost until it happens. Just the situation we are right now make us consider the bearish path a lot more, of course. At the same time, reversal happen at the maximum of the fear and the maximum of the despair. So there it is. Is at the time here. We are at the moment where we are in a max fearful environment. Max, and not maximum, because if we break down it will be even more. But almost at the most fearful environment. The less bullish sentiment. At the same time, we are at a macro low on almost every indicator you can find that have been given macro lows. At the same time, this is also giving hope to a lot of Twitter people. I know that, yeah, even if we want to consider right now to be the most fearful, probably not his, because it's true that time we spend here let a lot of people study all of this bottoming indicator, and it's kind of trending a lot. That's what makes me a bit fearful right now. It's the fact that there is a bit too much people into hope right now. But we'll see. Trying to gauge sentiment is probably the most complicated things here. So here we covered everything. Now what we can focus on is on this last part, right? The last significant high, what we can count from here. Can we count something corrective? And if it is not corrective, what can we count to try to forecast the next step? So I'm shifting to another chart here. By the way, Powell will speak in 26 minutes. Staying testy. Well, what he has to say. Well, I guess if he gave a bearish speak 2 days ago, it's gonna be bullish this time. And yes, there is that as well. They're really pulling everything down. I mean, I think even in Europe, the French girl from ECB or whatever, and Powell said that they want to, that their goal is to increase unemployment to try to lower inflation. How is, I mean, either the people that are taking this kind of decision are just absolutely stupid, or they know what they're doing and they don't care. But yeah, you see how what people are ready to do and to say just to save their situation, because of course the one that will be the most suffering from this are the poorest people. The other probably have what it costs to survive. Anyway, then after it's political. Here we'll say dump more. Okay. So from this, let's start with bullish path, which is that one here. Do we have a bullish count here? Yes, we have one. 1, 2, 3, 4, and 5. This is valid. There is a sub count in theory. Yeah, it is. Right. This is a less good part about it. We have a very big wave 4 compared to the 1, 2 here. But we can fit an impulse. It works. It's slightly profit, but it's really right. Still, doesn't break rules. Alternatively, we had another alternative set leading diagonal. 1, 2. 1, 2. No, that one is unvalidated. Yeah, that's the one unvalidated. So now, yeah, this one also. And the last significant high. Well, sorry. I say we can have an impulse. Obviously, we can have a corrective move as well. I don't know if I have the count here. IPC, I haven't. What it is. Well, anyway. This can be corrective or impulsive. It is valid at both. Obviously, it looks a bit more corrective than impulsive, but yeah, we had it. Can this be corrective also? Yes. So that's what we want to see. If this is the beginning of a new bull market, which I want to emphasize, it's still possible. I can read an ABC moving process here with potentially an ending diagonal in process as well for the wave C. You can see the count here. I talked about it last week. We were still at a higher low, so I was expecting a bounce here. Why did I was expecting a bounce? Because we had a clear 5 waves coming from the low here. So as long as we didn't breach the low, it was sensible to look for another move at least, either for wave 2 or wave B here, which would mean either corrective as a lower low, a lower high, either continuation of an impulse or continuation. Now that we broke the low, we invalidate this. Now this is still 5 waves to me. That's why you see that I put my wave A here, and I'm considering this as a flat here. A, B, C move. Finishing the wave C as 5 waves. And that's why I'm taking my fib extension tool from the high here to the low here instead of the low here. Project it from the proposed wave B, and we can see that we have the 1-1 extension coming just at the low, at the very low. Here, just above it. But as long as we don't breach it, I'm gonna repeat, it's very important. We can come as close as we want to the low as long as we don't breach it. This can remain a 1-2. Now it will be important that we don't breach it either on derivative, either on spot exchange. If we start to breach it on more than one exchange, it's gonna be invalid. We can consider like one exchange that have a lack of liquidity is not a big deal, but yeah. So here, how is this evolving? I'm not sure. I don't want to enter too much into this because it's so unclear with this volatility that we had on Wednesday. All we know is that we have an ABC move here. This could be an A, B. We could have finished a wave C here. Maybe wave 2 could be finished here. Could be finished here. Wave 3 could be finished already here, but it could extend as well, especially if we are still into wave 2 here, or if it finished here. This structure is extremely complicated to count here. Only clear thing is an ABC move here. But we come into 3 wave on the downside as well. We don't have an impulsive move here. So it's hard, very hard. Yeah, we have good candidate for 5 waves with some kind of ending here. So maybe we have an A, B, C. I don't know. I don't want to deep too much right now into this. Maybe at the end I will try. But yeah, the idea here, we could keep making lower lows, SFPs of the lows, and recovered, and finally go into a run. Corrective, ending, alternative, semi-bullish, well, bullish count. You know that if this is corrective and we are finishing a 5th wave, that's gonna be the end of the overall correction. Well, we could be looking maybe at ending diagonal like this, because that's the thing. Also, with how deep this move are, there's not hundreds ways you can count this. And if you don't want to have a very bearish target for wave 3 like this, standard target will be 161.8, which would send us pretty low. While the other way is to have an ending diagonal. So maybe we made a wave 1, 2, 3, we are in a 4, kind of 5. It's a pretty good idea because it will allow us to take liquidity above here and still again trap again at the very low before reversing. Also, target for the 5th will be to bridge that low in theory. Now it's not 100% mandatory. It is impossible for wave 2 to breach the low of wave 1. And the target for wave 5 is to breach the low of wave 3. At least, and there is big targets. But in a rare occasion, you can see a truncated wave 5. Especially, for example, if you don't breach it on some exchange and you breach it on others. Then you have a good candidate for truncated wave 5. And so that's how I could see a bullish fifth, is with some kind of ending diagonal, remaining to be seen how it evolves still. I think in that case we still have a wave 4 to finish here. So we have the monthly here. I believe it would be good if we are bullish to close the monthly next week above that monthly level. It would be important. So that could allow us to do it. Now, if this is bearish, well, that's how things could evolve. Still, this isn't clear. It's remaining clear. But maybe we have also can use the diagonal here as well, but as a sub wave 1 of the bigger wave 3 here. Wave 2 retrace could be just a retest of the monthly. It could be really shallow. It doesn't have to retrace much. But that means a very big breakdown here. I don't made target, but yeah, minimum target will be expecting for the wave 3 would be 15k. And it could be much lower. 13k. Or yeah, anywhere, in fact. We'll have to see if at some point we get some things that become clearer, gave us a 1-2, and then on the breakdown we'll say, okay, we have a 1-2 here. We can try to count using this to project the lower time frame and the bigger one. Hope this is all clear. I said a lot of stuff here today. May have to catch back what happened. I mean, to replay it. Or I will explain them again. But here are the path we can take. So yeah, I would like if this could become clearer. It is not. If we can manage to really to close monthly above here next week, that will give a bit more hope for the bullish case. Several of them. That doesn't mean we will not bridge the low after, but it will give more hope that we will recover then. Because if we look at what it is, that's the monthly that we have right now, right? And so for me, it's very important that the candle close above this. Otherwise, if it closes below, if it closes like this, it's indicating, it's giving a lot of probability that we will continue down. If it can close above it, then it's okay. We can see again a week and maybe a recovery, but it let me hope that this can reverse here. Otherwise, it take it a bit away. So what else do we have? Maybe a little Wyckoff view. Talked about this during the week already, but this can remain a bullish accumulation structure. Now we have an increase in supply interest, but not acceleration yet. Rather absorption, the last one, if we can consider this true volume as it is made by the Fed stuff. But where we are right now could be a secondary test in phase B of a bullish reaccumulation. For this to remain sensible, we need then to go back to the high of the range. Validation or significant increase of probability if we take the high here. Then that doesn't mean we will break up right away. Can remain in the range in the sense that we may have find a low at that point. We most likely need a final phase C, the accumulation. We can break the low and come back after. But the phase C doesn't have to make a lower low. So if we find a bottom here, well, we may build a wave 1 here, either wave 1 of the bigger wave 3, so wave 1, or if we make a lower low, just the first wave 1 and go into a pullback before going up. And of course, what happened here will be really important. Otherwise, the thing is, with such a significant range that takes a significant of time, if this truly break down, the target for such a distribution, yeah, seem to be at least into the 10K, if not lower. Seems to be. But as long as we don't lose too much, it remains valid. So that's pretty much it. Should I take a look at the lower time frame now? I'm getting a bit exhausted here. Braver reference. What's the vortex Discord? Vortex. The vortex is it's a group I'm part of. Of course. How can I describe this? There's a lot of stuff over there. There's a lot of stuff, of people giving signals. There's a lot of signal in it. They trade a lot of altcoins. There's a lot of rooms. There is NFT. Yeah, they're nice and knowledgeable people. But to be honest, for me, there's a bit too much things to be able to follow what happened there. In whole. But I know there's a lot of traders that make good profit, and yeah, they share it. They share a lot of signals and shout, of course, an analysis as well, and good projects they believe to be good. And also, yeah, buy or sell, longer share or short signals. So you can go check out. I think there is still a free trial if you want to try it. And started a bit of learning content over there too. So it's hard to summarize everything that is over there. There's a lot. And I'm in there as well. It's a friend of mine that started the server. So I joined them. Try it. Let's see how this evolves. Oh, they are doing good. They are doing pretty good so far. And there is a French section that I didn't spend much time yet. There's not a lot of French people into crypto trading, but there's a bit. And YouTube is not receiving enough data again. I think I'm still live. So short term, what do we have? So here the level have been retested nicely. That was a 50% of the daily wick. What structure do we have? It seems to be still potentially part of a correction here. We have a range, right? If this remain bearish, when we can look for low high, this could always as well be impulsive and corrective. I'm kind of long still, as I shared into the Discord. I took a long here at 161.8 because I was counting 5 waves down into a very small fair value gap here, at least on Bybit. That front runs a naked POC here. So that was a good long opportunity for me, at least for a scalp. I took profit on the 1-1 extension, which was also 50% retrace of this. I'm still in the long, stop is below here. Now we have 3 wave up, 5 waves down as it appeared. It doesn't look great for continuation here, but who knows, 5 minute scans are not necessarily the most reliable in a reversal. This could continue as some kind of leading diagonal. But overall, it seems to be 5 waves down, so whatever happened here, most likely looking to short here. Short either here or here or here, I don't know yet, depending how this evolve. Can I read some kind of correction? It's finished here, and then here. And that will say nothing. Depending if we have an impulse here, a correction, it worked better as an impulse in terms of target. That will be a very short wave C, but still valid. But if it's impulsive, and here it's impulsive as well, that means we need in theory another correction and impulse down that make a higher low here, and then this become either wave A of a correction or wave 1 of an impulse, and this become either wave 2 or wave B, and we're looking to go up. Knowing that with such a structure, what you're looking at is essentially building a base here, make a rise, fall back, bullish sentiment, and go take all the liquidity below here while saving the low here. But that doesn't always work, right? As you may know, because we had a few failing setup, especially on the higher time frame based on this, but that's how we trade, simply based on Elliott Wave. If we have 5 waves, we look to buy the retrace. Same way, if we have 5 waves, we look to sell the retrace. And we try it inside. We trade inside, especially when we can take liquidity and a significant point. It's a good take profit or short. So liquidity here would be if we do such a thing. You know, if you manage to get a short here, you take profit as soon as you take the low, and potentially you look for long. Same thing if we do that and do reverse after an ABC, you look to take profit as soon as you take the high here. Potentially looking for a short if that had to continue down, knowing that we may have a diagonal somewhere, you know, here that is still in process. Or if this is more bullish and you're in position for a large rise. Paul, speaking in 5 minutes, may get some movement. Should I watch that? I really don't want to. Where is the link for that? Breaking news. No, that's something else. Sydney Powell fails to show up to testify before the Georgia jury investigation or attempt to help Trump still be done. Bravo! That's the one. at 2 p.m. Transitioning to the post-pandemic economy. I am not sure I want to watch that. Really, to be honest, I'm not overly exposed on any side here. I have still my swing shorts that I mainly hedge because I have on all my swing shorts, I have taken my profits. That's a short from up here, from here, from here, even from here. Everything has taken profit, and the remaining remain open as an edge in case we continue down. I have, as I said, a long from down here, but not necessarily exposed a lot because, well, 5 wave. So if we get a bit of relief here, and if we get this, maybe I try to position again a bit more long. Otherwise, you know, it will be more if one of my scenarios seems to be fulfilling. So yeah, for example, if we made a wave 3 here, maybe here in a B and go for a wave C for the 4, so a big one. It would be a standard target here. Yeah, 160 wave, we'll have that in between. So if I manage to catch a long short term, most likely above that high but below that one, assuming that we have bounce in between, main target will be here to here. I say obviously above the high, but yeah, we have this monthly that is very important. Not sure I will short it, we'll see. But considering it might be trying to be saved for the monthly, I would be surprised if we don't rise here. And alternatively, if we just do that, indeed we just sweep the high here. Then for third, I might be looking for a long again on another swing failure pattern of that low. Same way I will do again if we do another swing failure pattern of that low.
So it's 7 years, it's the first time we've done a meeting with this in 9 or so. It's terrific. So these sessions started just a few years ago in 2019, in what turned out to be a very different time. They were valuable then, and we continue to benefit from them as we navigate the pandemic shutdown and the path to recovery. So we started with listening sessions around the country that brought together people and organizations, businesses, low and moderate income communities, workforce development enterprises.
I think that's going to be extremely boring. You say everything that is most important has been said already.
How our monetary policy decisions were affecting people's daily lives. So then the pandemic comes and upends everything, the way we work, live, learn, and conduct business. And we kept these conversations around Fed listings going. And we thought we gained valuable insight, which continues to help guide our policies. This process as well. So these events have now become permanent. I'm sure we remember each.
What happened? Okay.
They're really the real life embodiment of our policies, the way they affect the people that we serve, and they do inform our thinking as policymakers.
No.
So we continue to deal with an exceptionally unusual economic set of disruptions. Policymakers were committed to using our tools to help see the economy through what has been a uniquely challenging period. The insight
I just wanted to make it on the side, and now it's gone.
Opportunities are shaping what we might think of as the new normal economy in the performance center as we try to get there. So my colleagues and I are very happy to hear from our participants today, to host those of you who are tuning in to listen, and to do the work that we do on behalf of all Americans. Thank you, and with that, we'll turn it over to Governor Bowman, please.
Thank you, General.
Okay, there's nothing to say.
So pleased to be here with you all today in person to moderate today's discussion. And I just want to express my thanks to all of you for your willingness to travel to Washington, D.C. to be with us.
Yeah, great, thank you. Okay, whatever. Okay, nice. We are moving up now. Supposedly. Well, we'll see what happens. Yeah, clearly, I give you the high D. Main level, yeah, you know, POC, weekly level here important. Golden pocket. Another POC with 50%. I guess if we are starting the weekend with a rise, I would not be surprised to rise more. Is it possible that we take that high before taking that low? In theory, if we see 5 waves like this, no, but entering into the weekend, I'll be less surprised, you know. So I'm gonna give you, yeah, an idea here. Overall, that I would not trigger blindly, but overall, the idea would be something like this, right? Non-financial advice, but more or less a high T, right? That we will be in a wave, some kind of wave A or 1, maybe most likely A. Here, going for a B and going for a C, that might go higher. And here, A, B, C for the wave B. Knowing that depending, if that happens, depending where we find the top here, I would want to be able to read some kind of correction here, obviously. I take my fib tool, and I look for the, let me delete a bit of things that doesn't need anymore. Ideally, you know, if that goes successfully, ideally you target the 1-1 extension or 90%, and you count 5 waves here. And if you can't have confluence with your smaller fifth and your 1-1 extension here, target for this, etc. Give extra confluence and tighter invalidation, you know. So yeah, target for wave C should be at least 90%, but minimally the low of proposed wave A here. It has to be breached to validate a wave C. Perhaps Daddy Powell wants a scamp up during the weekend, or Paul stop talking already. Yeah. I'm leaving you with that. Thanks for watching, everybody. Don't forget to leave a like. Really appreciate. As always, there's already more likes than there's remaining spectator right now. So thanks, everybody. And yeah, don't forget, the only thing you control in the market is how much you lose. So risk management is very important, especially in such conditions. Also, don't forget to take a break from trading. If you do that every day, it's important to keep a clear mind. Appreciate your things, Virginie, and everybody else. Have a good evening, good weekend, and see you soon. Bye.